What is a strategic investment strategy versus a tactical investment strategy? That's what I'm going to be sharing in this video. Hi, I'm Camille Gaines here and on my website, retirecertain.com. I talk about my investing adventure over the past 30 years or so, as well as creating multiple streams of income over the past 15 years. In this video, I want to explain the difference between that strategic investing strategy you hear about versus the more tactical that is getting more and more popular. The first thing I want to talk about is what is a strategic investment strategy, and then we'll go into what the tactical investment strategy is about, and you'll be able to see what the differences are. First of all, I'll start with the similarity. Both strategic and tactical investment strategies own both offensive as well as defensive assets, often, not always, but often. Let me tell you what I mean by that. Offensive assets or investments are those that are going to increase in value when times are really good economically. Say the economy is growing, the stock market is rising, unemployment is low, things are going really well. During that time frame, or those periods, more offensive assets are owned. Those are things like stocks and maybe commodities, other assets that do well when the economy is expanding and growing. Those are offensive assets. On the other hand, defensive assets are assets that tend to do a little better when the economy slows down, during tough economic times, during bear markets and recessions. Examples of defensive assets are bonds and cash. Bonds are the most common and popular way to defend a market during tough economic times. So a portfolio that is strategic or tactical may hold both, but a portfolio that is strategic, it usually, well, pretty much always will hold both defensive and offensive assets. Assets that will do well, investments that will do well regardless of what the economy is doing. The next thing about strategic investments is that it holds the portfolio that's based on a strategic investment strategy, I should say, will hold the same percentage of the defensive and the offensive asset classes no matter what is going on, regardless of the economic conditions, regardless of what's going on in the economy. It will stick to that same percentage in stocks versus bonds, for example, no matter what's going on. That's different from a tactical strategy, but we'll go there next. Next, let's just finish up first and talk about the strategic investments so that you kind of understand this better. And this is the most common type of portfolio that you're going to see. Almost every financial advisor recommends a strategic investment portfolio, one that's mixed between stocks and bonds so that it will be protected no matter what happens in the economic environment. And you don't have to try to figure out what's going to do better when. You've got a set percentage of your assets or your portfolio total into those offensive and defensive assets, typically stocks and bonds. All right, the third thing about more strategic investment strategy is that it uses a set asset allocation sort of template that's more based on the risk profile and the goals of a specific investor. It's less about the strategy and more about what the investor wants. And then once the investor defines what they want in terms of goals and how much risk they're willing to tolerate, then a template is chosen. When I say template, I just mean something like 60% stocks and 40% bonds, or 90% stocks and 10% bonds, something like that. So that's called an asset allocation. You probably are familiar with it and you've heard me talk about it before. And then the fourth thing I want to say about most strategic investment strategies, they buy and hold the portfolio, that set asset allocation, no matter what happens, right? The economy can tank, we can be in a horrible recession. It will still have that asset allocation that was originally chosen, whether that's 60% stocks and 40% bonds or 90% stocks and 10% bonds. Typically, it's held no matter what. There may be a little bit of adjustment based on what's going on, but sort of the thought process is we're going to get through this. This was our plan. We're going to, write it out, and we know that eventually we will be back into a different stage in the economy. It will either be growing again or it will be slowing again or whatever it is. So we're not going to try to figure out what's going to happen. We're going to go with this asset allocation strategy because we know that based on how much risk you said you wanted to take and what your goals are, we think this will work to get you there based on what this asset allocation has done historically. So we're not going to change it. All right, so let's next talk about how a more tactical investment strategy works. With a tactical investment strategy, again, it may hold both defensive and offensive investments. A tactical strategy, though, is going to vary how much it holds, the percentages, I should say, it holds of those different types of assets, whether it's defensive or offensive. A tactical strategy will adjust the amounts based on what's happening in the economy and based on the price of assets, the valuations of assets. While a strategic investment will have more of an approach of if stocks are going up, bonds may be going down, but certainly it will generally say if stocks are going down, bonds will be going up because there's a flight to safety. Whereas a tactical investment strategy will be more about finding opportunities in the market based on different factors. Okay, the next thing about tactical investment strategies is they're often based on advanced and complex studies that are based on price movements or valuations or even technical indicators that measure things like momentum and price and stock movement of the different securities. So these systems are more advanced, they're more complex, they've been back tested over time, and there's been a lot of research. It's called quantitative analysis. This leads me to the next point that I want to make about tactical investments versus strategic investments. And that is that tactical investments are more about the strategy themselves than they are about the individual investor's goals and or risk profile. With most tactical investment strategies, decades of research has been done to determine, to reveal really how this investment strategy would have performed over past years and usually decades. This can be done because most tactical investment strategies, or certainly many of them, the more popular ones, are based on ETFs versus, say, just going to buy some individual stocks, a portfolio of individual stocks, or maybe some real estate. A tactical ETF portfolio would invest in something like VNQ, which is the real estate ETF, and it may invest in SPY, which is the S&P 500 index ETF. So a tactical investment strategy is very specific, and it has research and back testing behind it that shows how that portfolio or that strategy, that tactical strategy, would have performed in the past. Now, it's important to say here that that particular portfolio or strategy may have not been invented or created 20 or 30 years ago, even though the back testing study or research on it has been done on it. But because it's based on ETF, data can be pulled from the past to say, okay, if this strategy strategy did this and it had, 60% stocks and 40% bonds or 20% commodities or gold or whatever asset class it is, it would have had this return over this time frame, and it would have done certain things during that testing period. So the tactical investment strategies are more about the strategies themselves and the back testing and the research that's gone into them, whereas the strategic approach is more about starting with what the investor wants as far as goals and as far as risk profile, and then it's usually a very simple asset allocation. I really refer to it as a template because there's only so many ways you can, break up a stock bond portfolio, which most asset allocation models are based on stocks, bonds. Some of them throw in commodities, maybe some gold, real estate, certainly international stocks and other asset classes like that. So those are the main differences between strategic investment strategies and tactical investment strategies. If you found this information helpful, make sure you subscribe to my channel. I'll see you at retirecertain.com.